to the Trading Market Technicals morning call video for Friday, January 31st. Well, we did get that bounce that we're looking for. Dow Jones up 109, Nasdaq up 71, S&P up almost 20 points, and the Russell up $16.91. So that's a good sign that at least we got a bounce. Bounce wasn't as big as I expected. If you know Dow Jones is down on down days, 250, 300, 275, 150, 180, and we get a one bounce of 70 the other day, and now we get a bounce of 100. Really isn't that much. But look, you know what? It's a good sign that at least they're trying to stabilize the market, right? The bulls. But nonetheless, we are down again this morning. So the market does not have any memory, which tells me it's a dangerous market if you don't know what you're doing. So if you're new to the game, step aside, let the market volatility subside, and let it stabilize a little bit before you jump in, because your stops are going to need to be greater. Your position size is going to need to be smaller in order for you to manage this type of risk. So getting back into the marketplace here, we had Asia session come out a little weak, so emerging markets were a little weaker overnight. Not as bad as expected, but Nikkei was down, I believe, almost 400 points at one point. And then ECB had some inflationary numbers come out, which was worse than expected. So having a little bit of tough time in Europe, and then obviously they sell our futures. So now we're down about 10 handles already. So we're giving back almost all of our gains from yesterday, at least half of it on the opening. So we'll see what happens, but it doesn't look pretty. This market, I think, is in trouble. And if we can't get above 1800 on a closing basis to consolidate above that area, I think the markets are going to flush back down to the 1750-ish area, and I'll show that to you in the chart segment. All right, so let's run into what we're looking at here. This is the reason where I mentioned yesterday we had, looking for a little bit of a bounce. And I meant a dead cat bounce, and sure enough, that's what we had yesterday, right? We had a little bit of support here in this area. These are neutral zones in McClellan oscillator, but guys, if we really need to get down here to really flush the weak hands out. And I mean, what that means is going to be a pretty nasty sell-off or a string of selling to get us down to the 70-80 area here, because we've been down now about, 6 days in between, and it doesn't look too good. So barely just holding this area here. So let's keep an eye on the McClellan oscillator to get some clues of some decent selling. Now, we did get that back test, close to it anyway, on this symmetrical triangle I mentioned yesterday. But again, very vulnerable here. We could still continue to sell off here. Remember, just like we were overbought for so much time last year, we had pretty much overbought readings pretty much all of 2013 and part of 2012. So we could stay oversold for quite some time. So I just got to really use caution here, guys. The best tactics is really going to be buy strong quality stocks that are selling off in sympathy into support, and play that bounce for the day if you're a day trader, or if you wanted to take a little more risk overnight, swing trading, and or do what I like to do is option spread trading. Conservative selling premium would be your best bet in this type of volatility. Okay, so now we got the E-mini S&P, and this is, you can just see here, we're in this capped area of this cluster of buying. We sold off, bought, sold, and now we're down again. Now we're down about almost 10. You can see 975. So it's not pretty. This is not good. And if we actually lose this this area, we'll take that low as 1764. You're going to get an easy flush to the 1751, 1745 area, which will come in right around here. And once that happens, then you're going to need to digest again where this market is headed. Now, as you can see, we're oversold here in our MACD or RSI, so logically would be a good spot for a bounce, but every bounce is getting sold into, and now we have this consolidation area here. Look at it. There's a lot of bear flags out there, and I'll show that to you. You want to take this as a bear flag, that's fine, or just a sideways horizontal channel. Now, the bottom line is it's got to either take this area out of 1800 or 1764. Those are the two numbers that you must look at today and going forward. If we break above that 1800, which would be that nice little breakout above this kind of consolidation area, then I think you have at least a shot to try to get back above here, and then we would reevaluate it. But right now, guys, it looks like it's holding by a thread here. Now, this is the what I want to do here. I know it's a little messy, but I need to tell you this, show you this. This is why am I looking at the 1800 area? Well, first we have one of my lines here at 1797, right? 1764 will be the line in the sand. We all know that, right? This pivotal low here. This is definitely pivotal. And if we break below that, then we're going to flush back to the 1745, 1750 area. We do have a Fibonacci cluster right up in this area here along the 200 period moving average, along the 1797 horizontal resistance. This area is a big area. So this is a big area here, this little cluster of Fibonacci and the horizontal resistance along the 200 period moving average. So it needs to break above 1800 to at least alleviate the short-term bearish tone in the marketplace. Okay, so that's something that we're going to be watching. This is just the cleaner chart. Just wanted to show you the 200 here. Here's that sideways consolidation. So this area here, again, that 1800 needs to close and chop around a little bit, at least create some sort of a base back at these levels in order to alleviate that downside pressure. Otherwise, I think we can flush pretty hard to the downside, guys. You know, nothing good is coming out of anything at the moment. In the spiders, 177 is going to be the level we'll watch today. And, of course, moving forward, again, we have this consolidation here, so you might want to look at the 179.85. Just round it off to 180 at resistance and 177 below. Other than that, it's just chop. It's meaningless. Even yesterday's price action, although it was decent, all it was a short covering rally. And as you can see, market does not have a memory, and we continue to sell off here. Okay, bear flag, IYT. Here's our leader, right? Volume wasn't as great as you can see. Big distribution days when you have the sell-offs, light volume on the way up. So bear flag, and again, you can see if you don't want to call it a bear flag, call it a horizontal support, and that's what we have here. Down day, down day, up, and now we're back down again. So if we start to lose the low, take a look at your chart, look at the IYT, and if you take the low at 128.30, you're going to have a good beeline shot down lower, at least to this area here, which would be right about here, which is nice because it coincides nicely with this long-term uptrend line from 2012. You see the volume profiles? We have a little bit of a thin zone because once we break below that, we probably will flush down to this area here because we have low volume profiles are light. So not looking too good. We really need the transports to get back above and do what it's supposed to do, lead the market. Here's the IWM, same thing. You want to call it a flag, a horizontal channel, that's fine, but it needs to get above the 50-day moving average and to get above yesterday's high in order to alleviate some of this downside pressure. If it breaks below this channel, guys, there's a lot of room to the downside, and I think a big flush to the 200-day is not out of the cards. And as you can see here, we're just kind of melting along. MACD stochastics just moving over, and you see how once it gets wider and it gets away from the signal line, that's not a good sign. And you got the histograms moving lower and lower, making lower lows and lower highs. Not good. So we really need to start stepping up to the plate here. The bulls got to step up to the plate to hold this. Otherwise, the big flush that everybody's looking for is probably on its way. So let's just take a look at this here. All right, we got right there. All right, so now you got the Qs. Well, the Qs are having problems with Apple, now Amazon. Tesla doing well. That was doing pretty good, some of the high beta names. But again, barely, we did get above the 200, which is a good sign, above the 50. But now we really, you can see the 8 and 20 are curling over. So not looking too good. So let's just see what happens today. But if Amazon's weak and Apple continues to be weak, they're heavily weighted in the Qs. I think you're going to see a big flush in the Qs again. Diamonds holding that horizontal trend line support. Again, barely, just clinging. And this here looks a little bit better on the stochastics, but really need to break back above, curl up above 20. And this, now it is closer. You can see this is the weakest of the 5, closest to the 200-day moving average, and really needs to get back. I think even if it gets back up to the 50, I think it's going to get sold into. It's going to be that's going to be a tough spot. The 8's already rolling over. 20 is curling. By the time it does get up there, the 20 would probably be by the 50 crossing over. You're going to have this area of resistance. So I think anything above 18 and fails is going to be a great shorting opportunity for lower prices. Until something happens, obviously. Okay, as you can see, gold now not looking too good. I don't have the picture today, but the palladium is really taking all the metals down. Palladium in 3 days just got clobbered from breaking out, looking to break out, rolled over, and just got clobbered. That is putting pressure on gold and the precious metals and silver and copper. So if you are looking to get long gold, I suggest you do not get long gold here. If you look at the nibble long, I think you're going to get a better flush now. Everything changes, right? So you have this trend line area. You couldn't break it out. now rolled back over again. So now we're going to look to see where this thing could base, and if it can make a still a lower high from here, I think you got a long trade that's still valid. But if it starts to get down below this area, usually type of commodity usually breaks down and they start looking for stops, and that's when you'll be able to get lower prices again. And again, I still think that gold probably will see somewhere around 1150 in the coming weeks and months. It's just what it looks like. I would have loved to see a short covering rally run right up, but even with the FOMC, it just couldn't get any. It just looks like the markets in as a whole is getting a mass liquidation. Money's coming out of all the metals, all commodities and equities, and running into safe haven of bonds right now. And of course, the dollar. It looks like the dollar's kind of stabilizing a little bit as well. Okay, take a look at some of the sectors now. Here's the XOP, and I'm not going to show it to you every day, but I just want to show you that we really need to break back above. And once we start taking out of this, that's when we'll dial down into the oil and gas exploration stocks and see which one is actually moving. Okay, once it gets above the 50, it'll entice me a little bit more. But just want to show you how we look for some of these quality stocks that you can look for via the ETF. You dial it down and look for the holdings, and that's where you really start to look for. Now, again, the oil services, same thing. We really need crude to start to really break out, and I do like crude here. I really do. But again, if the market gets weak, you would assume that money would flow into crude oil and some of these commodity stocks, but it just looks like we're getting a mass liquidation here. And again, with the yen not really selling off, I mean, we sold off a little bit yesterday in the yen, but we really didn't have much of a sell-off. And it just, to me, that the yen really has a bid to it, and that's not a good sign. Okay, that's also, don't ask me why, it is a safe haven currency. I have no idea why they think that, but it is. And so you really just gotta take it with a grain of salt here in some of these markets. Okay, USO, nice spot, but again, the 200-day could cap this rally, this little rally, and come back in again, where you can actually add or start a new position. As long as it makes a higher low, into this area, as long as it holds the 50, easy to manage right below this corner here to put your stops down. But I think crude oil is looking pretty good, but it needs to really either break out. So if you're looking for crude, either you buy it in this area down here. I wouldn't buy it here just underneath the 200-day moving average. Just wait a little bit for a pullback or a nice chop and then a breakout. And then you have some room up to at least the 38 area, 37 area. And then, of course, we have the home construction. Did really well, broke out, and then kind of pulled back in a little bit, but still holding up well in this crazy market. So you could still find some strength here. XHB, this is the home building ETF, really just kind of stagnant below the 50. And, of course, you can see, look at Lennar. I mean, you see this. There are strength in different sectors here that you can look for, and you can buy on weakness or even just for the day. I mean, it does bode well. Here's Pulte, real nice breakout out of this, looking really fantastic. Next pullback into this area here. I like Pulte on any type of day trade. Big breakout in KBH. Look at that. Remember, we're looking for this now. This is where the KBH work comes even more interesting. You want to let it break down a little bit. Let's see if it backtests this trend line and holds, and the next bullish U-turn candle, take out of that high is where you want to get long, and then you get long to hold, and then that should be so. I love the KBH, I love the PHM and those builders. XLF did okay, but as you can see, it's really following the market, risk on, risk off. Citibank had some positive comments, but it just seems like this thing can't get out of its own way at the moment, and that's how it is. Like, it runs in cycles. Take a look at this horizontal trend line, holding this area here. Really going to need to hold here, guys, because if this thing breaks, it's going to flush even lower. So right now, if you're not in it, step aside, let it consolidate a little bit, let it get back at least above this symmetrical triangle, lower trend line, and then start to nibble in long here. Really you need the market to kind of see where this market is headed before you can put your plan in place, because right now, it's if you're not, little day trades here and there. What I like to do is during the day, if I don't find a quality setup in this crazy volatility environment, what I do is I start doing some research and I look for quality names and then I watch them. and then you watch them, and then you only need 2 or 3 really good days to make some money for the week, for even the month for that matter, depending on the size of your trading. But anyway, J.P. Morgan, same thing here, holding up okay. I do like it. I'd like to even nibble in longer some of these names, but with the market being uncertain as it is, you just want to step aside. I just don't like the way the market is right now. Goldman Sachs, same thing, holding in here. And then we have, just to run through tonight, you got Apple. Apple breaking the 500. I think Apple's going to flush back down to the 200-day moving average. I don't like the stock. I don't like the way it acts, especially when you have these vocal activists, Carl Icahn, tweeting out everything. There's a lot of headline risk involved. Now, don't get me wrong. If Apple flushes down 50, 60 points, I would not mind buying some straight out of the money calls, just for like a lottery ticket trade to see where this thing would go, and then take it from there. But obviously, if you have market weakness and you have a stock that's weak, it's going to get sold into. There's no question about it. All right, guys, have a great weekend. Be very careful today. Remember, higher volatility, which means bigger stops and lower share size. Remember that, okay? That's how you trade. Other than that, you're just gambling here. Markets are selling off hard right now in the pre-market session. As I left, the ES was down 9. Now it's down 14. So it is flushing. We could have a real nasty day today, guys. So really be careful. If you're not in the market, step aside. No reason to be looking to pick bottoms or tops. Let this market go. Let the Cowboys do its thing, and then look to pick up the pieces. That's where the big reward is, okay? Keep your palates dry. Cash is definitely a position when in doubt. Have a great day. We'll speak to you on Monday.